All righty. Good morning or good afternoon, depending on where you're joining us from. Thank you all so much for spending your lunchtime with us here today. All things adoption tax credit for today. So we're going to get started here in just a couple minutes. We still have a lot of people hopping on. So in the meantime, as y'all are hopping on, I'd love for you should see in the Zoom webinar app, there is a poll question that we launched, actually two of them. So I'd love if y'all could just take a minute and answer those questions for us. First one is, what's your connection to adoption? And then the second one is, how familiar are you with the adoption tax credit? So feel free to fill those out, and we'll take a look at the results here shortly. All right, and we're continuing to have people logging on here. So again, welcome y'all. Thank you for joining us for our webinar today. Just a little bit of housekeeping here before we get started. The webinar today, it is going to be recorded. So if for any reason you have to hop off early, although you're going to miss out on some things we're going to cover at the end, but if you do need to hop off early, or if you're with an adoption agency or another group and you want to share the recording with someone else who wasn't able to make it, we will be emailing out the recording of today's session, as well as a copy of the slides, because there's lots of great content in the slides that we won't get to, that some we will want you to be able to reference later. All right, looks like we got quite a few people logging on here. Give it maybe just one more minute. So as y'all are joining, you should see there's a poll question that we have launched. So as y'all are logging on, if you want to take a quick minute, open up the Zoom webinar app there, and you should see a poll question with two questions there. So if you want to take a quick minute to answer those, then we'll review the results. Very interested to see what we got. All right, we just got 10 more people logged on. They keep logging in. Love it. Well, I'll say for the last time here, again, welcome. Thank you all so much for joining us here. Good morning or good afternoon, depending on what time zone you're in. Thanks for spending your lunchtime with us here today. So as you're logging on, we've launched the poll question. So if you could just take a quick minute to answer those two questions for us, that'd be wonderful. And then we're going to take a look at the results together. Today, we are going to be discussing the adoption tax credit. All things regarding the credit. We're going to record the webinar. We'll send out a copy of the recording to you all afterwards. So if you want to share the recording with someone else on your team or your spouse, whoever it may be, you'll be welcome to do that. And then we'll share a copy of the slides as well. All right, we're going to go ahead and get started. So poll time. Let's take a look at the results. So for our first question, what's your connection to adoption? We can see here, so a good amount in the home study approved. Congratulations. You've made it past the big step, that big initial step. And then some that already matched or finalizing. It's another big one. Congratulations to y'all as well. We've got some agency workers and consultants joining us, some who have adopted in the past, and some just supporting others. And then those that are just considering or just in the process of kind of getting started with adoption, you're doing the right thing by being on this webinar today. We're going to share some great resources with you in terms of just funding overall, in addition to really focusing on the tax credit. Because what we've seen in our experience here at Both Hands is that typically the cost of the adoption is one of the main barriers that leads to families deciding that they don't feel comfortable moving forward. And we at Both Hands, we never want a family to let finances be the reason that a child doesn't have a forever family. So thank you for taking that step and joining us. All right, looking at the results for the second question, how familiar are you with the adoption tax credit? We got 14 out of 57 said pretty confused. All right. Then we got I understand parts of it, so a little bit. And then we just got three that said I understand it well, one that's already claimed it, and someone else, some more just here to learn. Perfect. Well, our goal today is that by the end of the webinar, I hope that you leave in that those numbers, those stats we saw, that those would increase, so that you at least leave with one new thing you didn't know about the adoption tax credit, if not more than that. So to kick it off here, we are joined by the one and only Becky Wilmoth, our wonderful friend from Bill's Tax Service. And Becky and I, we've done sessions like this at conferences in person all around the country, and then we've done the webinars like this before as well. She's a dear friend of Both Hands. She has worked with many of our families, and so we are so excited to have her join us. My name is Jared DeLong. I'm the executive director here at a ministry called Both Hands. If you joined us on our webinar last month, Both Hands, we help families fundraise for adoptions by organizing service projects where they work on widows' homes. So I'm going to share a little bit more about Both Hands here towards the end. So you'll want to stick around to hear a little bit more about that. But as we kick things off here with Becky, we have our nice headshots here, but I would really say it should probably look more like this. Here's poor old Jared. Here I am. You talk about taxes with me, and I run for the hills. I'm not an expert by any means. It gets a little scary, but that's why we got Becky. I have to say there's probably maybe no one in the country outside of IRS agents that are more well versed on the tax credit than Becky is. So you have joined the right session. She is going to tackle this as she does any other session we do with the utmost expertise. And I think you're going to learn a lot. So as we're going through the webinar today, please post your questions in the Q&A. We may not be able to get to all of them, but we will save all those that we don't get to, and then we will follow up with you individually to be sure that we're getting you the help you need and get those questions answered. We'll also share feedback with Becky as well, so she can reach out if she'd like, but you're going to have her contact info in case you need to reach out to Bills for additional questions. But you can think of it this way. This is the first time I felt old. Someone on our team, I said, it's like the Karate Kid, Becky is the master. Jared is just little Daniel's son. So Mr. Miyagi or Becky is going to answer all your questions for you. But someone on our team didn't know what the Karate Kid was. And I was like, oh man, I'm getting to that age, maybe. But before we dive in with Becky, I wanted to introduce you all to Matthew Enoch. He's our finance director on the Both Hands team. And Matthew actually had the privilege to work with Becky and Bills for their adoption. So Matthew, would you just want to take a few minutes and share a little bit of your story and what would be your feedback or just your wisdom you'd want to give to families on the call?
Yeah. Well, hello, everyone. I'm Matthew. I'm the Finance and Operations Director at Both Hands. My wife and I, adopted our son in 2021, and we adopted again in last year, 2025. We started the process in 2024. I think that the two things that I would highlight more than anything in this particular call is that one, there's no reason for anyone to look and say that finances is the reason that I'm not going to adopt. And I can't see any of you, but I'm looking at dads in particular, because I'm in that position where I'm thinking I need to provide for my family. I'm not going to ask people for money. I'm not going to, go out and find all these grants and figure out, I need to be able to muscle it and pay for it myself. Well, you probably know if you're walking through this process that it's very expensive and that's not always a possibility. like I said, we adopted our son in 2021. We adopted our daughter, and she's almost a year old. I think there's a slide, a picture of her as well, Jared. But yeah, she'll be 1 next month. Both of their adoptions, were typical domestic infant adoptions. It was very expensive, but I will say, all in. I mean, we never had to go into debt. um, we probably didn't end up out of pocket much more than a few $1,000s. There are so many grants, so many opportunities. There is the adoption tax credit. There's both hands. We raised $56,000 through both hands for our daughter's adoption. And there's just no reason, and I really want to stress that to men and to dads in particular, because I know that we can often be the holdup. Is a lot of times it's the our wives that come to us and say, "I really want to adopt," and we're like doing the math and got our spreadsheet open and saying that's just never going to happen. And I'm just here to tell you that if you're going to say no, don't let finances be the reason that you say no. And the second thing that I would say is that if you've already walked through that process, or you're looking to go through that process, um, do not, under any circumstances, use TurboTax or any sort of online program to uh, to take advantage of the adoption tax credit. And I'm saying that from personal experience. When we adopted our son in 2021, I had always, just been a standard W-2 employee. And that's kind of what TurboTax is made for. I used it and tried to take it. And they have little questions where they'll ask you, "Did you adopt?" And you think that it's all right. Well, before we got on, I was just telling Becky that I'm still waiting for the IRS to fix my 2022 tax return because it's not set up to do that. So having an expert like Becky to walk you through what the adoption tax credit really is, how to take advantage of it, and I'll even correct Jared a little bit. And you said outside of IRS agents, I don't think that IRS agents really know how the adoption tax credit works half the time. So having someone on your side who can even go and correct the IRS, which I think had to happen with ours, is such an invaluable resource. So, you know, do don't go into it thinking that this is just a simple, like not like anything else that is run by our wonderful government. It's a maze, and you need somebody on your side who really knows how to navigate all of that. So don't use TurboTax. Don't let finances be the reason you don't adopt.
Amen. Thanks so much, Matthew.
Yeah.
Uh, yes, and you're correct. I've heard of Becky correcting IRS agents on their understanding of the credit. So yeah, you're completely right. Awesome. Well, hey, thank you for hopping on and joining us, Matthew. All right, Becky, I think we've hyped you up here. You ready to rock and roll?
I'm ready.
All right, let's do it. I'll let you take
Hey,
it away.
oh, thank you so much. Thank you, Matt and Jared and Madison, for doing this webinar today. It's just the perfect time to do an adoption tax credit webinar. I just want to tell you a little bit about me. I am an enrolled agent, which is the highest license you can obtain from the IRS. My boss and his wife, Alan and Jamie Newcomb, they've been blessed by adoption 3 times. I've been blessed by adoption twice. And so we absolutely understand where you're at, what you're going through, and sometimes there's some hurdles you have to leap over. So that's why we started our adoption ministry many years ago to help adoptive families understand how the adoption tax credit works, when to claim it, how to claim it, and it's too much money to leave on the table, and we will fight for you. I was just telling Matt before we got started, one that I have been fighting for a family for 3 years. We won last week, and so they will be receiving their check plus interest for an adoption tax credit return. So, don't give up. This is a wonderful credit, and there's some really, really good improvements this year on the adoption tax credit. And so, one of the important things that I really want to emphasize is, what is a tax credit? What does it actually do for me on my tax return. And so what happens is, I'm old enough to remember back when we had to fill everything out by paper and you had to go into the old tax book that they would mail you, and you would have to go across the line and find out how much your tax was. And then, depending on, what your tax was and how much withholding you had, the difference is what you got back as a refund or what you would owe to the IRS. And so, what a tax credit actually does, let's say you owe $5,000 federal tax liability on your taxable income after your itemized or standard deduction, and then you find your taxable income. And so what happens is then your tax is decided by how much of that taxable income that you have. And so what that does is whatever that tax is, depending on what bracket you're in, the adoption tax credit or a regular tax credit as well will come in and help cover that tax liability. So what happens is if your federal tax liability is covered, what you get back from your withholding is generally your refund. Just kind of keeps it simple. But what we're going to talk about is the adoption tax credit. It has a dual benefit now because part of it is refundable again, which we have been advocating very strongly for since 2011. So the adoption tax credit is a one-time credit per child per successful adoption, or if you have a failed adoption on a private domestic adoption, you can claim the credit, but you have to wait until the following tax year. And if you don't use all of the adoption tax credit, the first year you claim it, if you have a carry forward, you can use it and carry that forward for up to 5 years. So whichever comes first, either the 5 year cutoff or if you use it all in that time frame. The tax return that you are doing right now, which is your 2025 return, is the adoption tax credit is 17,280. The adoption tax credit for next year is 17,670. So the adoption tax credit for 2025 that you are doing your tax return on right now is 17,280. 5,000 of that is fully refundable and 12,280 is non-refundable. And I'll explain the difference between refundable and non-refundable. So what happens is when your tax liability is met, what you get back after your tax liability is met is your refund. So let's say, for an example, we're just going to keep the numbers kind of plain for 2025. Let's say you had $5,000 federal tax liability for 2025. So what happens is the refundable portion of the adoption tax credit comes back to you as a refund, and the non-refundable portion, the 12,280, helps cover your tax liability. And what you don't use is carried forward to the next year. And the also dual benefit of this is the regular child tax credit. The regular child tax credit has also increased to 2,200. 500 of that is non-refundable, and 1,700 of that is refundable. So, for an example, I did a tax return last week for a client, and usually if they're face to face and they're in my office, I do the tax return without the adoption tax credit, and just so they'll kind of see how it works and show them the difference. So they had a $2,300 federal refund before we did the adoption tax credit. After we did the adoption tax credit with the 17,280 for 2025, when 5,000 of that was refundable, 1,700 of the child tax credit was refundable, and they got their withholding back. So when we were done, their refund was now $17,368. Huge, huge, huge difference. So just do me a favor. If someone tells you you don't qualify for the adoption tax credit and you actually do, go somewhere else. Because we have to amend tax returns all the time for people who were told they didn't qualify when they actually did. And if you want to go to the next slide, Jared. So here's a really good explanation of some of the terms that we're going to be talking about. We're going to be talking about a tax credit. We're going to be talking about a tax deduction. We're going to be talking about refund and withholding and your tax liability. And some of these terms I have already used, but you're going to get a copy of this slideshow when it's all done, so you can go back and kind of look at your tax return and kind of reference it. It'll make a whole lot more sense to you once you see, okay, this is my tax return. This is what we were talking about. This is what the adoption tax credit does. This is what the child tax credit does. Now, a tax credit is something that helps cover your federal tax liability. That is the tax that the IRS says you owe on your taxable income. Okay? A tax deduction, which is because of the One Big Beautiful Bill, there are a lot of tax deductions this year that are new. Some of those are the premium portion of overtime. That's a tax deduction, which lowers your income. There is the senior tax deduction, which lowers a senior's taxable income. There is the tips deduction, which lowers their actual income, which the chain reaction of that is that you are going to pay less tax. You are going to get more money back. But the deduction lowers your income. The tax credit helps actually cover the federal tax liability before it gets to your withholding. So now your withholding is the amount of tax that is deducted from your paycheck, whether it's weekly, bi-weekly, once a month, however it is that you get paid. It's that federal withholding is deducted on your pay stub. And then it shows up in box 2 of your W-2 that you receive from your employer, generally by the end of January. And those are the things that once your tax liability is met and it's covered and you have zero tax, then you get that withholding back that's in that box 2 on your W-2. And if you want to go ahead and go to the next slide, Jared. Listen, the adoption tax credit has been around for a long time. And some have, been concerned in the past that it was going to go away. Well, I'm very thankful because of some amazing advocacy by the Adoption Tax Credit Working Group and many other agencies that we are affiliated with. And we are thankful to be on that Adoption Tax Credit Working Group to help get it refundable, to help make it a permanent part of the IRS code. Because, let's just be honest, adoption is expensive, but there are ways that you can afford adoption, and Matt said it beautifully. Don't let the cost scare you away from adoption if you feel like you're supposed to adopt, because there are many grants. There are many ways that you can fundraise. Both Hands is a prime example of how you can fundraise to help, afford the cost. And then the adoption tax credit, and I'm going to talk a little bit later about QBOD and what that means. Some people have to pull some money out of retirement. You can pull it out penalty free to help finance your adoption. And then the adoption tax credit can come along behind you and help with some of those expenses after the fact or even during if you're doing a private domestic. So the American Taxpayer Relief Act made the adoption tax credit a permanent part of the IRS code. You can go to code 23 and you can find the permanent IRS code for the adoption tax credit. Now, we're mainly today going to be talking about the federal adoption tax credit, but I also want you to be very aware that there are many states who also offer either a credit, an income exclusion, or a deduction from your state return. So if you have a question and you want to know if your state actually has one of those, you can email me, after the end of this webinar, and I will be more than glad to help you find if your state has one. I actually have a list that I renew every year, to keep up with the different states that have one. One state in particular is fabulous. They have a $5,000 credit per year per child for a child adopted out of the foster care system if they are considered special needs, which means hard to place, until they're 18 years old. And another state has a $2,000 or a $5,000 credit. Those are huge state credits. So, like I said, this is a lot of money you don't want to leave on the table. So, if your person who does your taxes says, well, well, I don't know, or find someone else. And there are different criteria as to who's eligible, when to take the credit, how to claim the credit, what type of adoption you have, all determines what to claim, when to claim, and how to claim it.
And Becky, one question for you.
Sure.
For your services with bills, so you're able to help families in addition to applying or taking advantage of the federal adoption tax credit. You can also support families and file in any state or all states that provide a credit as well.
Yes, yes, sir. I am an enrolled agent. And like I said, that's the highest license you can obtain from the IRS. So I am licensed for all 50 states, to do tax returns for all 50 states and represent clients for all 50 states. And I did 42 states last year. So I can absolutely help with any state and obtain the federal and state adoption tax credit.
Love it.
Yeah, me
Awesome.
too. Here's the important part. What expenses actually qualify? Well, the IRS code says any reasonable and necessary expenses. Now, this is for private, domestic, and for international adoptions. I'll talk about foster in just a minute. But for international adoption, it must be final. And for foster care, it must be final before you can claim any of the expenses. That's court cost, attorney fees, travel, agency fees, home study fees, dossiers. I mean, all of those are covered expenses. Advertising, all of those are covered expenses. The only expenses that are not qualified are birth mother expenses. And the reason is because it violates federal law to deduct personal living expenses. So birth mother expenses are not qualified expenses, but all of the other expenses that are necessary and reasonable, you can claim as qualified expenses. Now, as I said, for international, it must be final. Foster, it must be final. But if there's special needs through the foster care system, no expenses are necessary. Now, if let's say you are pursuing a private domestic adoption, you can take the expenses, but if it's not final, but you have to wait until the following tax year to claim those expenses. So let's say, for an example, sometimes you may have a 2 or a 3 year span that you're paying for private domestic expenses along the way. You start out with your home study expenses and things like that. So if you had, let's say let's talk about your 2025 return that you're doing right now. Let's say you have 2025 expenses, but the adoption is not finalized. You cannot take them on your 2025 tax return. However, if you had 2024 expenses or prior year, any expenses from 2024 into a prior year, you could claim on your 2025 tax return that you were doing right now. But if you only had 2025 expenses and the adoption is not finalized, this is for private domestic, you cannot take them on your 2025 return. However, you could take them on your 2026 return next year, even if the adoption is not finalized yet. So the private domestic is the only place where that works. And that also applies to failed adoption expenses. Unfortunately, a failed adoption is a part sometimes of the process. I know it's heartbreaking, but let's say you had a failed adoption in 2024 and you paid expenses in 2024 or prior. You could claim those failed adoption expenses on your 2025 return. And again, but if you had a failed adoption in 2025 and all of the expenses were in 2025, you cannot claim those failed expenses on your 2025 return, but you can claim them on your 2026 return. So private domestic is the only type of adoption where you can claim any expenses before it's actually finalized. You just have to wait until the following tax year.
Hey, Becky.
Yes, sir.
One question we had was someone was asking if their adoption isn't finalized yet, but they've had expenses over the last couple years. So say they had expenses in 2023, so but the adoption is not yet finalized this
Mhm.
year. Can it only be for the previous year, like for 2020? If you're filing
Mhm.
this year for 2025, or how far back, how many years back can you go if the
You can
adoption's not
accumulate.
finalized?
You can accumulate all those expenses from 24 and prior years. You can accumulate and add all of those together, say 24, 23, 22, 21, 20, however many years that you've had claiming expenses and it's not finalized. But the caveat is it has to be 2024 and prior years. And you could claim that on your 2025 return. So yes, the answer is yes. The 23 expenses, 22, 21, any of those expenses could be claimed on their 2025 return, just not 2025 expenses.
Gotcha. Great.
Okay, here's a wonderful fact. All adoptions qualify for the adoption tax credit except for a spouse's child. That's private, domestic, international, and foster care. And I'm going to explain the foster care situation on the next slide. But if you have any paid qualified expenses, you qualify. Now, if you receive grants, the grant money must come off the top of the qualified expenses. If someone gives you a gift, that's exactly what it is. It's just a gift. It does not come off the top of the expenses. The only time any amount of gift that someone gives you is of importance. If someone gives you $19,000 or more as a gift, then a gift tax return would have to be done. That's not a taxable issue. That's just a reportable issue. Now, if you adopted and you have expenses for a private, domestic, or international, it is according to the amount of qualified expenses that you had. And that also includes the income exclusion if your employer has a qualified adoption benefit program. We're going to talk about special needs here in a minute, but I want to clarify what the IRS considers special needs and what you and I consider special needs are two complete different things. The IRS considers special needs as a child in foster care that is hard to place without assistance. Okay, that is for foster care adoptions, special needs. Every state has a different criteria. But for international adoptions and private domestic adoptions, special needs does not count. Because what you and I consider special needs is generally either a physical disability or a mental handicap, or maybe a possibility of a future handicap due to, some certain circumstances. But those special needs does not apply to international adoptions or private domestic. The special needs criteria applies to foster care adoptions hard to place without assistance. So that applies to both the credit and the income exclusion can be claimed on the same adoption, but it can't be claimed for the same expenses. So keep that in mind. And if you do not have an employer approved adoption benefit and you're in the process, now's the time to ask your employer. Okay, now for foster care adoptions, you can qualify for the full amount of the credit with no expenses necessary. This is where some of the confusion has been, over the last, 20 years, is because, so many people have been told by other preparers, well, you don't qualify because you didn't have any expenses. That is not true. I'm going to say that again. If you have adopted a child from the foster care system and you have a subsidy agreement with the state that the adoption was finalized in, you qualify for the full amount of the credit with no expenses. And if someone tells you different, go somewhere else. Don't ever be afraid to ask questions. This is too much money to leave sitting on the table for you and for your adopted child. So each state calls it something different, okay? And each state has a different criteria as to what qualifies as special needs. One state is any child over the age of 1. One state is any child over the age of 3. Another state is that has to be a sibling group or ethnicity. All of those things come into factor, and basically they are hard to place, and that's what is considered them special needs. There are 3 types of subsidy agreements. One subsidy agreement could be the monthly stipend that you receive from the state for the care of that child. One type of subsidy agreement is just strictly for medical care until they are 18 years of age. The other type of subsidy is a one-time reimbursement up to $1,500 for lawyer fees. Those all 3 qualify for the full amount of the credit with no expenses. So you for 2025, you're talking $17,280 worth of adoption tax credit for that foster care child. And the requirements for the IRS to qualify for that are the subsidy agreement. Each state calls it something different. It may be adoption assistance eligibility determination, but it's basically the subsidy agreement. That's the English version. And then the final judgment of adoption. If you have those 2 things, you qualify for the full amount of the credit for a child adopted from foster care system. And if you have a question as to your state, please contact me and I can let you know what the criteria is.
All right. Thanks, Becky. So I've been looking at the amounts here for the credit over the years, and I mean, it is encouraging to see how it's increasing, and
Yes.
that increase is partly with inflation, but then also with the refundability. That is something, as you mentioned, that's fortunately because of some folks in Congress that are really pushing and looking out for adopted families. So, do you want to talk about the income phase out ranges and just the credit
Yes.
amounts here?
Absolutely. And as Jara said, this has it increases, every year for inflation, but also because of some great advocacy. Because adoption doesn't, hasn't gotten any cheaper. And so it has increased you can see each year it has increased a little bit for inflation, and so has the income phase out ranges. So for the tax return you're working on right now, the adoption tax credit maximum that you can claim is 17,280. That's 17,280 for the adoption tax credit and the income exclusion if your employer has that, and 5,000 of that is refundable. And the modified adjusted gross income, that's what I want to explain. This is not adjusted gross income. This is modified adjusted gross income. Now, the difference between those two is the modified adjusted gross income is what we used to call front page deductions are added back in, okay? That is student loan interest. That is IRA contributions. That is the self-employment deduction that you get on the front page of half of your self-employment tax. Those things are added back into your adjusted gross income. That's why it's called modified adjusted gross income. So, if you qualify, for every other reason for this year, for 2025, it's 259,190, and it completely cuts off at 299,190. Now, if your modified adjusted gross income is in between those ranges, you will qualify for it basically in it cuts off in $10,000 increments. You'll get a part of it. And for 2026, your the adoption tax credit's going to be 17,670, and they are increasing the refundable portion a little bit to 5,120 of that is going to be refundable, and 12,550 is going to be non-refundable to help cover your tax liability. And the modified adjusted gross income ranges has also increased from 265,080 to 305,080. And the reason it's really important to know these numbers, I want you to keep these numbers somewhere if you're in the process, especially because if you're close to that modified adjusted gross income phase out range, there are some things that you can do to tax plan to help you benefit, the adoption tax credit and income exclusion better, defer some compensation, put some more money in your 401k. There are several things that you can do to help get your income, your modified adjusted gross income down, to help you get below that income phase out range. And I realize, there are something, it just is what it is, and I've actually had families, say, it's going to be either finalized at the end of December or the beginning of January. And then you can kind of control, okay, what's our income that year, or what's our income going to be next year? Can we do some tax planning ahead of time to make sure that we qualify to take the best advantage of this amazing credit? So it's really important to keep these numbers, screenshot it.
And Becky, someone asked, is for the income phase out ranges, does that also include overtime?
Yes.
Okay. And I'm looking through, we've had some more questions coming in here. Okay, one is on grants, which I know we're going to cover here in a bit. So I'll circle back.
Okay. Oh, listen, I got to tell you about Cubode. Many of the families, I've been doing this a very, very long time. Okay, I have been doing taxes for 25 years now, and I have been specializing in the adoption tax credit since 2011. So I've been specializing in this for 15 years, and a lot of families, and whether it's a private, domestic, or international, I have seen at the end of the adoption, you need that last push to whether it's to travel, if you're adopting internationally, or whether it's to pay those last lawyer fees or agency fees, or whatever the expense may be. You have some money in your retirement, and you can pull it out, and that's what Cubode was made a permanent part of the IRS code for. That's exactly what it was made for. It's qualified birth or adoption retirement distribution. So what that means is you can take out $5,000 out of your qualified retirement plan. Your spouse can take out $5,000 of your qualified retirement plan with no penalties, because if you're under 59 and a half, there is generally a 10% penalty plus the tax for withdrawing out of your retirement fund early. But with Cubode, qualified birth or adoption distribution, you both can take out 5,000 with no penalty. Now you're going to have the tax depending on what tax bracket you're in. But this can only be taken at the year that the adoption is finalized. So you're going to have the adoption tax credit to help cover that tax as well. So it has a very good dual benefit here. You can take some money out if you need. Your spouse can take some money out, up to 5,000 each, no penalty. You're going to qualify for the adoption tax credit to help cover the tax liability. So there's some huge benefits for this Cubode. So just remember that when you get to the end and say you need that little extra push or you just need it for something else, you can take that money out and no penalty.
Love that. That was new for me. I was not aware of that. So yeah, great. Thanks for mentioning that, putting that in there, Becky.
Yeah.
We've got about five, maybe 5, 6 more minutes because I want to leave some time for Q&A here at the end. We got some great questions and some I think we'll answer here. Um, but
Okay.
so when everyone's preparing and getting ready to you know actually file for it and work with you or another accountant, walk us through what do they need to keep in mind here?
Okay, there's some very important things that I recommend. Number one, get one manila envelope, mark it IRS documentation. And if you get a letter requesting more documentation, don't panic. I'm going to tell you exactly what you need to send to the IRS if they request more documentation. The first thing is final judgment of adoption. The second thing is if it's a foster adoption, you need the signed and dated version of your final judgment of adoption and subsidy agreement. If it's a private, domestic, or international adoption, you need the signed and dated home study. You need the signed and dated final judgment of adoption, certificate of adoption, decree of adoption, whatever that state or that country titles it. And then you need a copy of all of your expenses. Okay. Keep them all in that envelope. Put it all together in one envelope. That way you don't have to panic. And if the IRS requests documentation, don't ever send the originals. Don't ever send the originals. Don't ever send the originals. Okay? And I highly recommend that if you have to send documentation in, whoever is first on that tax return, put their social security number in red Sharpie on each piece of paper that you send. Because sometimes what happens is a tax return goes one direction and documentation goes another direction. That guarantees for it to go back to your account by putting that social security number at the top. And make sure you ask questions. Please make sure you ask questions. And if you don't, if your preparer says you don't qualify, ask somebody else. And I highly recommend if you don't know who your representative or your senator is, go to adoptiontaxcredit.org and they can help guide you to ask your congressman or congresswoman to help get the full amount refundable again. Don't be afraid to contact them. That is their job, is to represent us. And we want them to know that it helps so many more people when it's fully refundable, especially if you're self-employed. I'm thankful for the 5,000 that's refundable this year because in the past, it has not been except for 2010 and 11, and it didn't cover self-employment tax. It didn't cover the first-time home buyer payback credit. It didn't cover the penalty if you took something out from retirement. But now Cubo will let you take out $5,000 per person, and since 5,000 of it's refundable, it can help cover self-employment tax. Okay, let's go to documentation. This is the important part. This is what caused so many returns to go under review in 2010 and 11 when the full amount was fully refundable. I do hundreds of adoption tax credit returns every year, and this slide you want to screenshot because if the IRS or if your state requests documentation, here is what they're going to ask for. They're going to ask for the final judgment decree of adoption, if it's foster care, the subsidy agreement, the home study, all of your qualified expenses. And as I said, they all have to be dated and signed copies. They will not accept a preliminary copy that's not signed and dated.
Anything else on these, Becky?
Screenshot.
Okay. Love it.
All the grants, just remember it's not taxable income. You just have to take it off the top. So let's say, for example, you had $25,000 in qualified expenses and you had $15,000 in grants. So you would qualify for 10,000 of the adoption tax credit. Now, as I said before, if someone gives you a gift, that's exactly what it is. It's a gift. It's not taxable income. It's not reportable. And as long as it's not over $19,000, nothing has to be done. If it's over $19,000, a gift tax return will need to be done by the person giving you that gift. It's not taxable to either one. It's just reportable. And then once again, if it's special needs through foster care, no expenses are necessary. The only adoption that does not qualify is your spouse's child. A tax credit actually helps cover your tax liability. A deduction lowers your income and has a chain reaction that lowers your tax liability. But a tax credit is always, always better because it helps cover. If you do not have an adoption assistant benefit program at your employer, ask your HR department. It does not cost them anything. But the benefit to you is you can exclude for this year up to 17,280 and next year up to 17,670 from your taxable income if they have a qualified adoption benefit program. And the Dave Thomas Foundation has a great PDF that you can take to your HR department. And Kelly Ellison also has an employer benefit program that she can help employers. So if your employer doesn't have one, please, please, please ask them. And if you need to wait on the Social Security number, file an extension. The reason is some people say, well, I'll just use an A10. I'll apply for an A10. It's a temporary adoption identification number. The problem with using an A10 is you only qualify for the $500 other dependent credit. You do not qualify for the child tax credit, the $2,200 child tax credit. So if you need to file an extension to wait for that Social Security number, I advise you to wait. It's a $1,700 difference because that Social Security number has to be received by the due date of the return before you can claim child tax credit. And remember, extension is an extension to file, not an extension to pay if you have a balance due.
All right. Thanks, Becky. And again, we're going to send out a copy of all these slides. Here's just a few other great links to check out. Under resources here, this is Becky's website, and then I'll show you her email here in a second. I wanted to point out too, there's common FAQs. So several of the questions that y'all have sent in, which I'm hoping we'll cover a few of those, but we'll follow up with y'all individually to answer those if we don't get to them today, because some are more unique to your situation. But this FAQs here that the National Council for Adoption has put together is a great resource as well. And so I would check this out. Now, I wanted to mention real briefly just on the funding side. So in addition to the tax credit, and some of you all have asked about, it sounds like some folks are working with Lifesong for Orphans, or I see even some of our Both Hands families are on the webinar here. But in case you're not familiar with what other funding options out there, we actually did a webinar last month with a few of our partners here. So we're going to, I'll have a QR code here you can scan, or we'll include in our follow-up email a recording of that webinar in case you didn't have a chance to watch that. But it goes over grants and loans out there, as well as fundraising options, and one of which includes Both Hands. So for those that may not be familiar with Both Hands, we help families to fundraise for adoptions by organizing a service project where they work on a widow's home. And so how Both Hands works is we coach a family through all the steps from start to finish. A family applies to work with us, and then once they're approved, we coach them through gathering a team of their friends and family. So think about their small group from their church, coworkers, whoever wants to be on their team. That team commits to serving a widow in their community. Usually it's a Saturday morning type service project where they'll serve with things like landscaping, cleaning, decluttering, just things that, as you can imagine, are hard for the widow to keep up with around her home. That team also commits to sending out fundraising letters, really similar to if you go on a church mission trip, and you ask people to sponsor you so you can go on the trip. It's the same idea. So people will send out letters that ask their networks, hey, would you sponsor me while I serve this widow with this team? All the funds that come in for my sponsorship are going to go towards supporting my friend's adoption. So it's a beautiful thing. The widow gets free help around her home, and then 100% of the money that comes in goes to the family's adoption. We don't take any percentage out or any portion out for our operating costs. So our projects are averaging about 23,000 raised per family over the last 3 years. And so that is pretty significant. If you look at that, plus the tax credit, other grants and options out there, with the webinar with our partners that I mentioned we did, I added it all up, and right there should be more than enough to cover the cost of an adoption for a family. We're also offering $3,000 matching grants for families who apply and complete their project with us by August 1st. So if you've been looking for fundraisers out there, we'd love to partner with you. You can go and apply at bothhands.org, or you can reach out to us if you have more questions and just want to hop on a quick call before you get started. And then we also offer $1,000 supply grant. So that can be used for purchasing the supplies for the widow's home, things like mulch or flowers. And also it covers the cost of all of your fundraising materials. So your letter, your envelopes that the fundraising letters will get sent in, and the postage as well. So the goal is really that families are paying nothing out of pocket for their Both Hands project, right? It's purely a fundraiser for your adoption. And again, no fees are taken out. We even cover if a donor gives online and they choose not to cover the transaction fee, Both Hands actually covers the fee to ensure 100% goes to the family. So our process is super simple. You just have to have a completed home study. You can apply with us. We typically get back to you within 1 to 2 weeks for approval. And then with disbursements, we can pay providers like your agency, we can pay directly if you have an open balance with them. Or we can actually reimburse you. This is one thing that's very unique that Both Hands does that not many others do. We can reimburse you for expenses you've already paid out of pocket based on whatever is available in your Both Hands fundraising account. And then on the post-adoption side, we can help as well for families when they bring their child home. They need help with medical or mental health, counseling, therapeutic treatments, and travel for those treatments as well. And then we also do other we also have branched out the Both Hands model, where we can also help orphan care and foster care ministries or churches with raising funds for an adoption fund, and lots of things like that. So for sake of time, I'll keep it brief there, but that's a quick overview on Both Hands. And then again, we'll send you the slides here. This is a link to the webinar we did last month. And then here, Jared at bothhands.org. Please feel free to reach out, and any questions you have about Both Hands or any of these other partners, we're happy to answer these for you. And lastly, here is Becky's information. So again, we will connect you with her for any specific follow-up questions that you have that you've posted. Becky, I know we just have a few minutes left here. One question I saw probably 4 or 5 folks ask, it was around just they experienced a failed adoption in previous years. So could you give an overview of just like one person said, I had a failed adoption in 2024. I didn't claim any of the expense. Should I ask my accountant to amend my previous tax return?
Yes, absolutely. If they had expenses in 2024, if they had failed expenses in 2024, you can actually put those expenses on your 2025 return. If it was prior expenses to, let's say you had, a failed adoption in 2023 and you didn't take them on your 2024, you could amend your 2024, or you could put that on your 2025 return. The only caveat of a failed adoption expenses is you have to wait until at least the following tax year before you can claim it, and any failed adoption credit that you receive, you must, if you have a successful adoption after that, you must take that credit off of the successful adoption that you received on the failed adoption tax credit.
Got it. Okay. And someone had asked, if we're working with an adoption consultant, are the consultant fees, do those qualify for the credit?
Yes, absolutely.
Okay. And then a few folks have asked, you mentioned this before, but I wanted to maybe just have you go over it again. If someone's working with the Life Song or with both hands, the funds that are raised and like our matching grants as well, those all go in the form of a grant to a family. So if the family's receiving, say their adoption is going to cost $50,000 and they receive $25,000 in grants, how does that impact them with the tax credit?
The only time that would actually impact them is if they have a qualified employer benefit program, because you can't claim the same expenses for the credit and the income exclusion. So if they had, $50,000 qualified expenses, they received 25,000 in grant money, they would actually have 25,000 to claim the 17,280 for the credit, and then the remaining for the income exclusion. So they wouldn't get the full amount of the income exclusion and the adoption tax credit, but they would get, part of it. But if they don't have an employer qualified benefit program with their employer, it would not impact them whatsoever.
Okay. Now, if their adoption costs 50,000, and what if they received $50,000 in grants? So essentially, the grant completely paid for their adoption.
Correct.
Um, what would they? Any options in that situation?
No, if it's completely covered by grants, you would not qualify. One thing you have to remember is, some of those items have to be separated out. That's why it's real important to have an itemized list, from your agency, what's paid, how it's paid, when it's paid, because some of that grant money may be just a gift. It's not actual grant. So, those numbers have to be um, separated, so how much is strictly grants, how much is a gift, how much was fundraised. All of
Mhm.
those things are important because it all has to be separated to see how much they would actually still qualify for.
Gotcha. And Daniel had asked for the tax credit, can it only be taken if you itemize?
No, it has nothing to do with itemizing your deduction. It is a complete separate credit than the standard or itemized deduction. The itemized deductions is when you take charitable contributions, mortgage interest, real estate taxes. Those things are on a Schedule A when you itemize your deductions. Fewer people can itemize anymore because the standard deduction is so high. So it has nothing to do with itemizing your deductions. It's a complete separate credit and complete separate income exclusion. And the only one thing I forgot to mention that I really want to mention is you cannot file married filing separate and claim the adoption tax credit. The year that you claim the adoption tax credit, I mean, if you're single or, head of household, that's different. But the only options you have is married filing joint and married filing separately if you're married. So you cannot claim the adoption tax credit married filing separately.
Okay, yeah, that's pretty important. Good to note that.
It is.
Um, what about folks that may, let's see, someone had asked any special considerations for those who own their own business and pay taxes quarterly rather than withholding?
The biggest issue with that would just be the refundable portion of the adoption tax credit now would help cover some of that self-employment tax, and then the non-refundable portion would help cover the regular federal tax liability. So there would, need to be some planning done as far as, if how much they would pay in quarterly, if you're self-employed.
Gotcha. And then on the back on kind of the both hands front versus if someone's fundraising with both hands where it's a grant versus they're fundraising through GoFundMe where it's more of purely, a gift, like it's not
Mhm.
tax deductible for it. It's not considered a donation to a charitable entity. What's the difference there in someone's approach with the credit and how they report that?
Well, if someone gives a gift through a 501(c)(3), and it's considered a grant, that comes off the top of the qualified expenses. Let's say someone, does a GoFundMe, it's just basically a gift. It has nothing to do with coming off the top of the expenses. It's not taxable income in any way, shape, or form. It's just a gift. But when it comes through as a grant, then it has to come off the top. If someone gives the gift, let's say someone gives a gift to Lifesong or ABBA Fund or both hands for that family, that entitles them to take the deduction, and it's just a gift to the recipient who is adopting. That's why it's, like I said, it's really important to have that itemized distinction of what was a gift, what was a grant, so you know how to handle it when it comes to the adoption tax credit and the income exclusion.
Got it. Makes sense. All right. I'm reading through other questions here. Okay, I think that's someone to go fund me and on both hands. So we covered those. All right, great questions here.
Don't ever be afraid to ask questions. If I can say one thing, because a lot of families, I answer a lot of questions all over the United States. Um, don't ever be afraid to ask questions. And that's one thing that, concerns me when I talk to people. They're a person, that normally does their taxes. Maybe they've never handled an adoption tax credit. We've helped tax preparers from all over the United States as well, and attorneys and agencies, and just simply because this credit was made to help make adoption more affordable. And so it's really important. When we first started this, we were doing local seminars, and then it bloomed into a nationwide mission for us. We knew this is what God wanted us to do, and He just basically put His hand on it and blessed it. And we were doing a seminar, and we had a couple come in to the seminar, and they had adopted a child, and we helped them with their return. But they had a friend of theirs who had adopted four boys, and she was told she didn't qualify for the credit by three different preparers. And so I told them, I said, give her my number, just let me talk to her for 20 minutes. I can tell her if she qualifies. It took her a couple weeks because she was afraid, because she had been told no so many times. And so she finally called me, and within 5 minutes, I knew that she qualified. And
Hmm.
so the end of the story is we got her back $46,000 when other
Way to
preparers
go.
she didn't qualify, and she did qualify. So don't be afraid to ask questions. Like I said, it's too much money to leave on the table, and you want to make sure that number one, that they should even be doing tax returns. The IRS has a directory where you can look someone up to see if they are qualified to be doing tax returns. You just go to irs.gov and go to the prepare directory, search in the search, and just look up and see if that person, is an enrolled agent, or if they are a CPA, if they have the qualifications. So it's just a lot of money. So I don't want families to lose out.
Absolutely. And honestly, I think that we could probably use those funds maybe a little bit more efficiently than our government can. Well, Becky, thank you so much for your time. I know we still have some questions rolling in. For sake of time today, what we're going to do again is we're going to reach out to you all that have answered or asked these questions that we haven't gotten to today, and then we'll be sending out the recording. Someone had asked if they have additional questions, who's best to reach out to, if it's regarding both hands or just fundraising in general, grants, loans, things like that out there. Please feel free. You can reach out to me. Um, my email is jared@bothhands.org. I'd be happy to answer any of those questions for you. And then on the tax credit side, please do not reach out to me. You're going to want to talk to Becky and her team. They will be happy to review your situation, come alongside you, and support you. And then, even if it's going back and making adjustments to previous tax returns, Becky, you all can assist with that as well.
Absolutely.
Fantastic. Perfect. Well, Becky, thank you again so much for your time. And again, thank you all that joined us here today. We'll send out the copy of the slides, the recording for you as well. And please, please do not hesitate to reach out if you have any additional follow-up questions, but we'll be reaching out to you individually for next steps. So thank you all and have a great rest of your Tuesday.